Hi there, welcome to Neppy Invest. Today I'm going to talk about a company called Freedom Foods. Now, I'm hoping you were not a shareholder before today because the value of your shares would have taken a serious battering because at one point the share price was down as much as 94% compared to where they were at the close of trading the most recent day they did trade, which was 9 months ago in June 2020. This company had their shares suspended for 9 months because they had to work their way through some significant accounting issues. In fact, they also had to restate their 2018 and 19 financial statements because of these issues. So today I'm going to talk about those issues, why this company was in a suspended state of trading for 9 months. Then I'm going to talk about why I never took a position in this company. I have looked at this at Freedom Foods about 3 or 4 times in the past, over the past decade, and every single time I've looked at this company, there was a massive red flag that popped up. And I'm going to talk about that red flag and why it's very important to look at financial statements. Now, I was listening to a podcast a few days ago, and in this podcast, there was an expert who said, you don't have to look at financial statements because that's looking in the past. And when you buy into a company, it's all about the future. And I'll talk about what I talk about today will hopefully show you why looking at financial statements is very important. Now, if you looked at Freedom Foods and liked what they do and just bought off the potential of the company without looking at financial statements, you would have looked straight past a significant red flag that was shouting at you not to buy. Although in my opinion, this was not really a company I would buy into because of things I found well before May 29, 2020. This trading update the company released to the market was really the first sign of bad things to come. And if I saw this announcement and I was a shareholder of a company, I would almost immediately sell out. So they announced that they had to write down inventory by 25 million, and that is a bit of a red flag. It might not seem a lot, but it is, and I'll show you why in a few slides, why that is a significant amount. And the market thought likewise. Share price went down 14.7% from $4.36 to $3.72. And this is also another reason why selling out on bad news can be a good thing, because if you waited a month or so, you would have been selling out today potentially at 20 cents. Now, not much happened for about 3 or 4 weeks, but at June 23rd, 2020 at 5:46 p.m., the bad news just flowed through in consecutive days like a raging river. And the first piece of bad news in isolation, you wouldn't draw much out of this. So it was just that the CFO and the company secretary had resigned. Now, as I mentioned, in isolation, this might not be bad news because he could have been resigning for any reason, this Mr. Campbell Nicholas, but he is the CFO, and every time I see the CFO resigning, that does raise a bit of a red flag in itself, even if it's in isolation. But it wasn't in isolation because the next morning, before the open of trading at 9:40 a.m., they announced that the CEO and Managing Director, Rory McLeod, is on leave pending a further announcement that is expected to be made early next week. This should have been an automatic sell. If I read this, automatic sell, without a doubt. And a lot of people thought likewise. Share price was down 14%, went down from $3.52 to $3.01. And in this sort of instance, this is why this is or should be an immediate sell. You don't be patient, you don't wait for any share price going higher, because a few hours later, they went into a trading hold. So at 2:58, they went into a trading hold, and the shares did not trade from this point until today, where they opened at 20 cents. And the whole reason they went into a trading hold was concerning its financial performance, which is a massive red flag in itself. But at this point, if you were still a shareholder, there was nothing you can do but wait. And really, you didn't have to wait that long, because a few hours later, they released a corporate update, which was not good reading. So those inventory write-downs that were $25 million, remember I said that was not that good. They had to increase those write-downs to 60 million. Now, if you think that's not a lot, just to compare that, to the fact that that is 3 times the value that they sold their cereals and snacks division to Arnott's. And that should show you how much of a write-down this was. Now, the reason for the write-down is even a massive, if that's a word, even a bigger red flag. It relates to obsolete and out-of-date stock dating back to 2017 and onwards. And that raises the question, did they know about stock inventory? Did they do that sort of thing? How could there be out-of-date stock for 3 years sitting on their shelves? That just boggles my mind. And the first thing that pops up is either management were incompetent or worse things, which I won't mention here. So they also requested a voluntary suspension to allow it to investigate its financial position, and that in itself does not read good. They also did a conference call, and a lot of really good questions were raised in this. So if you do have a chance, I would highly recommend going through this. But my favorite question was, do you have any suspicions or are you aware of any fraud occurring? And the answer was sort of the obligatory, no, we don't know anything. But if we do find out, we will let the market know as soon as possible. And again, this just raises this thought in my mind, either management is incompetent or something worse, and this is the worst thing. And in either case, you have to let the management go because they're really not suited to your business at all. Now I'm just going to go back to the last time I looked at their financial statements, and this was in 2018. At this point in time, the market was absolutely in love with Freedom Foods. The market cap at this point was $1.6 billion. Now just keep that in mind when you read these numbers. So this is sort of the first thing everyone or any shareholder, anyone would see. Revenues up 34.5% to 353 million. Profit up 71% to 12.7 million. Wow, they're growing phenomenally. But just consider that they have a market cap of $1.6 billion and profits of 12.7. Just keep that in the back of your mind. And that in itself should show you there was something wrong about the valuation with Freedom Foods at this point. But there was something else, an even bigger red flag than this. And I'll show you that in the next slide. If you know anything about me, you know how much I like to read cash flow statements. If I had a choice between reading any of the financial statements, it would always be 100% the cash flow statement. I can get a lot of information out of reading this, and I do suggest instead of reading all the other financial statements, read this. So much information. The first thing I always go to is receipts from customers, sort of a proxy for revenue. They are different, subtly different, but a good proxy. And what I want to see with receipts from customers, just like revenue, is an upwards trend. And funny enough, Freedom Foods had a really good upwards trend when it comes to revenue and receipts for customers. So actually that gets a really big tick in my book or my checklist. The next thing I look at is determine whether the company is operational cash flow positive or negative. Well, really, I don't have to determine that because they provide you that information in the net cash from operating activities. And Freedom Foods was positive in operations by $24.4 million. That's another tick in my checklist. But that's not where I stop. I always go to the cash flows from investing activities and I look at payments for property, plant, and equipment, which is capital expenditure. And it's very important to know whether a company is capital intensive or not. So for instance, if you're looking at airlines, you have to know they are capital intensive and they're going to spend a lot of money on capital expenditure, buying new planes, maintaining planes, that sort of thing. So you have to be aware that that sort of thing is prevalent in that sort of business. Now, without knowing Freedom Foods, I would not think this company would be capital intensive, but in 2017 and 2018, they spent $138 million each year on capital expenditure, which seemed to me at the time when I saw this quite exorbitant. And in isolation, if this is just a one-off or two-off, that might not be a bad thing. So we had to dig a little bit deeper, and you'll see that when I go to the next slide. But what does that mean? Well, the next important thing, once you go through operating cash flow and capital expenditure, you come to the free cash flow, and that is the real cash flow coming into the business. And so how you calculate the free cash flow is you just take the operating cash flow, take away the capital expenditure, you get the free cash flow. And in 2018, the free cash flow was negative 114 million, and in 2017, it was negative 134. So what does that mean? Well, that means that's the amount of cash the business is bleeding. So they are losing that amount of cash per year. And that also means they did significant capital raisings to fund that bleeding of cash. So they raised 277 million. And it's maybe coincidental, but the capital expenditure in both those years, if you add it up, is 277 million. And the capital raisings is 277 million. So they were raising capital to fund capital expenditure. Maybe it's just a coincidence, but can it be really that much of a coincidence? Now, I think it's very important to know that capital expenditure can fall into two categories: capital expenditure for growth and capital expenditure for maintenance. Now, if Freedom Foods were spending all this money on growth initiatives, that would actually be a good thing. But I don't have any information on that. They didn't provide that, and most companies won't. Some companies do provide whether they're spending capital expenditure for growth or maintenance, but I didn't find any information on Freedom Foods. But I would guess, and this is just a guess, that since they're spending a lot of capital expenditure each and every year, a lot of this is just for maintenance reasons. I could be mistaken, but if it is for mostly just maintenance reasons, that's actually an even more negative thing. So what were the red flags? So the free cash flow in itself for those 2 years wasn't exactly the red flag. I wanted to see the history of the free cash flow. Was it a one-off over these 2 years, or was there a trend here? And the really bad thing was I found a significantly horrendous trend when it comes to free cash flow, and the market seemed to completely miss this. They just fell in love with the revenue growth of the company, because you can see this in this graph. So I've taken the revenue, market cap, and the free cash flow and just put it in one graph. And I'm going back to 2011 because before that there was a fairly small company and they didn't see the growth until after 2011. So if you go back to 2011, they had revenue of 45 million, market cap of 27 million. From 2011, the growth rate in revenue was 34% per year. So it's gone from 45 million to 476 million in 2019. And as again, the market loved that growth in revenue, and they loved it so much, the market cap grew at a 64% per year rate. And it went from a market cap of 27 million in 2011 to 1.6 billion in 2018 and down to 1.4 in 2019. But the big red flag, the reason why I found this company uninvestable, was the free cash flow. And just listen to these numbers year on year. 2011, they were actually positive, 200,000. And that was the only positive year they had when it comes to the free cash flow. 2012, negative 1.5. 2013, negative 6.5. 2014, negative 13. 2015, negative 43.6. 2016, negative 57.4. 2017, negative 133. 2018, negative 114. 2019, negative 199.8. So 2017 and 18 were not a one-off. This company was bleeding cash like nothing else. And this was a reason they had to continually do capital raisings to fund the capital expenditure they were doing each and every year. And this is why I found this company completely uninvestable. The market thought differently than I, but this is the main reason this company got into trouble. This relentless free cash flow expenditure or negative increasing rate. In fact, the compound annual growth rate of the free cash flow was negative 137% per year. Again, negative 137% per year. Anything negative there is bad. This is bad. This is horrendously bad. So again, that's the red flags that I found and why I did not even think about buying into Freedom Foods. And here is the market reaction to Freedom Food. So previous to this, on the most recent trading day, they closed at $3.01. They opened today at 20 cents. That's negative 93%. Now, what happened in the next 2 hours is fairly amazing. The share price went from 20 cents all the way up to 78. So that's a significant bounce. And that would be an argument why sometimes you don't sell out on the open when you get such bad news like this. Because if you bought on the open today and sold near the high, you would have had nearly a four-bagger in 2 hours. So that's significant gains in such a short period of time. I'm pretty sure there would have been some day traders who did that. And then from midday onwards, the share price just leveled off and went down a little bit on much lower volume. So at this point in time, I have no desire to buying into this company. I'd have to see some sort of proof that they're turning the business around, becoming not profitable, because they've been saying they're profitable, but are becoming free cash flow positive. That is the most important thing for me, is that they can fund everything in their operations and are free cash flow positive. That's all for this video today on Freedom Foods. If you do have any comments, make sure you leave it in the comments section about this company or any other company, and eventually I'll get to answer any comments you might have. Otherwise, I'm not a financial advisor, so any sort of financial advice you need, I can't give you. And if you do need that sort of advice, make sure you seek out someone who is qualified and can speak to your own financial needs. Otherwise, have a good day. That's all for this video. Bye.